What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale back in the saddle again for another edition of the Real Estate Friday training, guys, with your partner, man. Take a picture for your mom and them guys, and welcome to this week's training, guys. It's just gonna be me today. Cliff is actually going on vacation with the family, so it's gonna be me. I may be out in the next couple of weeks as well. Also, but man, we're gonna get it in, guys, on this, brother. So hey, welcome to the show. Let's get in. If you could share, and subscribe to the channel if you're getting value. This is gonna be a really good one today, guys, concerning this. Now, did I get the bag? Yes, I got the bag. Every single day, I got that bag every time, guys. So, guys, if people would ask me if you want to get the merchandise, go to I Got That Bag University t-shirt, guys. There it is. Scan on the QR code. Get your I Got That Bag University. Let us know when you get the bag by showing up with your shirt. I call that your diploma, guys. Go ahead and do that, guys. All right, guys. So let's dive into this real quickly, guys. Now, on this edition, guys, let's talk about the current market analysis. It's very simple, right? What's going on with the market? It's kind of still the same. We talked about last week, the Fed not changing the interest rate, which means rates for a 30-year fixed FHA loan, credit score 720 and above, you're looking at 6.5%, 7.5% interest rate potentially on that. If you the range of $0 to $300,000, $350, you're okay. You're at the bottom of the market. That's still going like crazy, which is good. Number two, if you're looking at 300,000, 350 and above, that's a 350 to about 850, looking at about 90 to 120 days on the market, guys, a long period of time. And then 850 and above, you're looking at anywhere from 9 months to, I've seen even 24 months, guys. Depending on the area that you're in, that luxury market, guys, is really suffering pretty bad. So if you're trying to, typically in that luxury market, you get a lot of cash buyers, right, that come in and buy cash, and they want a significant discount, probably anywhere from 30 to 40% discount. And I'm seeing it. I saw a property in Florida, guys, to where I believe that the current value was about $2.5 million, freshly renovated, nice looking property. I mean, it was on the ocean, on the water, guys. Guys, it just sold for $1.6 million. So get this straight. Worth 2.5, bought it for 1.6 mil in Florida. So you're looking at a $900,000 discount. That's what's going on in the market, guys. So that's the luxury market. If you're looking at somewhere like a $350 to $900,000, I'm seeing some kind of fly off a little bit, which is fine. But what was happening is people get a little bit more aggressive because in some form of fashion, you're seeing FHA doing 80-20 loans, 90-10 loans, 96.5 to 3.5% loans, which means that FHA is sponsoring the senior debt and the junior debt, which is 100% financing, guys. And that is not a good sign when it comes to the market at all, because that smells a lot like 2008. I know I made a lot of money during that time. I bought a lot of real estate in 2005, 6, 7, and really 2008. It just took off, guys. I'm talking about subdivision. So, but guys, man, let's dive into this real quickly, man. So, like I was saying before, FHA financing at 100%, that is here. I'm getting emails right now from mortgage banking companies. We're talking about big boys, not the small fries, the big boys, man. But that are offering 100% financing, senior debt and junior debt. That is kind of like it's kind of like VA loans. VA loans are 100% financing. And for veterans, that's great. But now they're trying to expand that, but package it a little bit differently. And on those junior loans, guys, what they're saying is that's junior loan at 10%, 20% down, which is what they're financing out, or 3.5% down, they're financing out. What they're doing in this is they're charging probably 2 or 3% on interest on that, and it's a 30-year term. But if you pay well for 10 years, it's forgiven. So it's kind of like a forgiven loan. But that's kind of a catch-22 because of the fact that most loans, guys, or the lion's share of the interest is, to be honest with you, is in the first 7 years. That's the lion's share of the interest, guys. That makes some sense. But it's it's that if that happens, guys, I would say do 100% financing if you can afford the payment and you have a plan to be able to manage that payment, guys. Leveraging out right now is a huge deal. If you can do it the wise way, if you do it this way, but 100% financing, guys, it is here. Just be wise on the structure of your deal, right? For me, what's going to say? How you doing, Stephen? Good to see you on Instagram. For me, I don't mind 100% financing in an investment strategy standpoint because I buy so cheap and I buy in mid-tier towns. So 100% financing for me is cool, but it's 100% financing is typically for the retail buyer, not the investor, the retail buyer when it comes to this type of financing. So, man, it's just be careful. Just be careful, guys. But, guys, man, let's talk about today's topic real quickly, man. Real quickly. Now, I tell you this here. For a lot of people that I hear when it comes to 100% financing, this is what I'm hearing them say a lot of the times.
Right. Yeah.
Again, guys, if you are really wanting 100% financing, please understand the numbers. Understand those numbers, guys, because if you can't pay that junior debt at the interest rate, and I anticipate an interest rate on those to go up from 2, 3, 4, 5, 6% as well, just be careful with those numbers, all right? Know your numbers, even if you're a retail buyer. Now, let's get into today's topic today, guys. Man, guys, we're talking about real estate versus the stock market. What is the smarter investment strategy? Now, this came up because a good friend of mine, and you know him very well because I play him a lot, and his team, Valuetainment, had a discussion concerning the performance of the stock market and the real estate, right? We're going to hear this, and I'm going to comment on what they're saying, guys, and you're going to be, how they're describing it is accurate, but there's some context left out of it, not purposely, because their audience is not us investors. They're the retail investor when it comes to stock market, as well as when it comes to real estate. But let's dive into it real quick and see what's going on. Here we go.
Tom, right before we got started with the podcast, you said, and I Googled it, I looked at it, with the reports being said that the S&P is about to get to what?
Yeah, UBS came out and said that they're going to put a target forecast at 5,600. They think that the forces on the stock market are good, even though the consumer can feel bad.
Okay, wow. So check this out, Vinny. So while real estate is not showing any kind of optimism or what could happen with it,
sure,
stock market's about to go to 5,600. Okay.
Listen.
So if the stock market's about to hit 5,600, where's S&P at right now? When I say stock market, I mean S&P. Go show up where S&P's at 5,000 right now.
5,300.
Okay. So it's going to go up another 300 points. 300 points on 5,000. 5,300 is what? 7%. Let's just say 6%. 5.8% is what it is. Okay. So if we go to real estate, the difference with real estate, where the real estate investor is going to make the argument, is the following.
Here we go.
In order to buy stocks, I'm putting $100,000 of my money in there.
Okay.
Where I'm competing on, if the market does 10%, I make 10% on what? $100,000, which is what?
Correct.
$10,000.
Correct.
But if I use $100,000 to buy property, I'm buying how big of a property? A $500,000 house.
Sure.
Let's just say, or condo, right?
Yeah.
So $100,000, I'm pretty much margin, not necessarily, but I'm using debt.
Sure.
So my $100,000 on a $500,000 house, now I'm paying a loan on $400,000. Let's just say I'm paying $3,500 a month, $3,000, $3,500 a month, whatever the number is, right?
Sure.
So watch this. If that $500,000 property in 2 years goes to $550,000, okay. Now I got what? 50,000.
Yes, you
do.
So
50,000 on the original 100,000 is what? 50%.
Correct.
But that 50,000, when you choose to sell, you're going to have to pay what?
Fees.
4% commissions, give or take, on $600,000. So $600,000, 4% commission is what?
Correct.
$24,000. So your $50,000, 24 is gone for what? Fees. You net 26 over 2 years, so it's really 13% per year. Not even considering the upkeep that you have, right? So that's the argument real estate's going to make versus the stock market. But at the same time, the problem with some people that are just waiting for real estate, they're not getting involved in what's going on with the market today. They're missing out on NVIDIA. They're missing out on a bunch of AI stocks. They're missing out on not being a small cap, mid cap. The other day, I'm at the Goldman Sachs event. Very interesting, Tom.
So here's what Patrick's talking about. And what he's saying is actually accurate. The description of him talking about putting down a down payment, buying a property at $500,000, in 2 years increase to $50,000. That's the delta there. You increase 50% or whatever it may be as far as your cash on cash return, which is fine, which is good. But he's saying that you're missing out on so much action in the stock market, and he's correct about that because really the stock market is kind of being really manipulated because there's so much cash being infused into the stock market itself, guys. There's a lot of fake success. Now, if you are wise, you can actually benefit on fake success if you know how to walk in the market. As a gentleman that I follow on Instagram, I think it's called the Wall Street Trap. Good brother, and he is killing the game when it comes to the stock market. But guys, let's keep going, guys. And he's talking about real estate investors. Now, the thing that I say about it when it comes to real estate investors, we don't buy that way at all. If the property is worth $500,000, right? We're not going to buy it at $500,000. We're going to buy it at a discount. Anywhere from 20, 30 to 40%, depending on the area. So he's giving a retail price point. I understand why, right? Retail example, because he's using retail investors in stock market as a parameter. Because when it comes to you buying stock, you can buy. There's two ways of buying stock. You have what they call preferred stock. That's that IPO stock. When they actually go public, right? You make your money there, like wealthy money there. Then you have what they call retail stock. That's the regular investor through mutual funds, through your retirement account. Most investors are retail investors. They are not preferred investors, right? In real estate, I am a preferred investor. I like to buy it at a significant discount. That's me. So the example he's using is kind of an apples to apples scenario, but the buying techniques are different. But it's good information. Here we go.
Very interesting. The family, everybody that has sold a bit, was 60 families there. Minimum net worth to be in that room was $1 billion. Okay, and the high was $30 billion. Incredible things to learn. One of the guys gets up there and says the craziest thing. They said, "Who's your? How do you feel about the future of the stock market?" He says, "Oh, I fully believe the market's going to do very well." He says, "Based on whose analysis?" He says, "Because the number one analyst in my life for the last 45 years is my grandmother."
Sure.
He says, "Excuse me?" He says, "Yeah, my grandmother." Why? My grandmother's 99 years old, and she still tells her stockbroker and her financial advisor, "I only want to buy growth stocks."
Wow.
Did you understand what happened right there? She's
strategy.
99 years old. How many more years you got left to live? 1, 2, 3, 4, any day.
She should be in bonds. Could be gone right now,
should
for all
be
we
in
know.
bonds and cash.
That's crazy.
She's saying, "Put me in stocks, buddy, because I believe in America."
Yeah. Wow.
So that is the part that I think sometimes this is the part where diversification makes sense, to have a little bit of stocks, a little bit of gold. If you're comfortable, a little bit of crypto, a little bit of real estate.
Yeah.
That's the part some people are missing out on. But this chart shows it all. Go ahead, Adam.
No, this is Tom, as you just said. Here's your metaphor. People speak, but numbers yell.
Correct.
Say it.
Words talk, numbers scream.
There it is. So look, what I see here is that it takes a literal worldwide pandemic for real estate to actually compete with the stock market. How could you say such a thing? Just look at the numbers.
Well, that's the case because the stock market is number one where most investors are located in, right? Retirees, IRAs, 401ks, TSBs, 403bs, they are actively invested into funds, right? They actively invest in the stock market. So the lion's share of the investors are in stocks via their retirement accounts. When it comes to real estate, guys, that is most investors are not there. And the sophisticated investor does not buy retail like the retail individual in the stocks. actually do, which is what the lion's share of investors are in the stock market. We buy below wholesale. Let's keep going.
The numbers. They've had one time during the pandemic that they've been above double digits, real estate.
Okay.
Stock market 1, 2, 3, 4, almost 5 times since the 1930s. The average stock market return is what? 10% year over year. Sometimes it's closer to 20%.
Yeah.
But that doesn't mean that real estate is bad. It's just not the rate of return that you can get from the stock market. Now, why do people...
I disagree with that, guys, because of the fact that, again, it depends on how you actually buy. Am I a biased guy because I'm a real estate guy? Sure. Give me some grace. But all I'm saying is I disagree with that because of the fact that let's walk through the example real quickly, guys, okay? Walk through the example real quickly, all right? If what they're saying is correct, and again, what they're saying is correct, I'm not saying that they're wrong. No, they're right. The picture that they actually showed of that chart, those are retail investors in retail buyers in real estate and retail buyers in the stock market. Let's see it again real fast for the folk in the back row. Let's see it. This right here, guys. This right here, guys. These are retail numbers. So you have retail stock investors and you have retail real estate buyers, not investors, buyers. Now, why did I say that? When I actually acquire real estate, guys, and I buy it right, I can actually generate an infinite return. Infinite return is higher than a 10% return. Now, watch this. Now, he talked about if a property increases from 500,000 to 550, there's a 50% delta there, right? $50,000 delta there, which he's right. He's spot on. Then he talked about fees getting paid if you want to sell it. Yes, those exact fees, right, even higher, are present if you sell your stock. So in both scenarios, you are paper rich when it comes to real estate, and more richer, I would say, when it comes to the stock market. Here's the difference. I actually have a way, and there's another way also when it comes to stock market as well. I can actually get the cash out of my real estate and pay zero in taxes. Zero. Is there a way for you doing stocks? It is, but the LTV is going to be a little bit different, right? So again, if you want to really kind of take away all fees, guys, utilize debt in both scenarios. Very simple. Let's keep it going.
1930s, the average stock market return is what? 10% year over year. Sometimes it's closer to 20%.
Yeah.
But that doesn't mean that real estate is bad. It's just not the rate of return that you can get from the stock market. Now, why do people invest in real estate? Number one, it's tangible. It's easy to understand.
Correct.
It's a lifestyle choice. You've got kids.
Yes.
You've got school districts. You've got neighborhoods. You've got safety.
And it cannot be manipulated. The stock market can be manipulated very easily by one big thing. The Fed could just turn on the printing press and flood the market with cash. And there's inflation. Inflation helps me as an investor. It helps me. It makes my assets, which is tangible, which you can't manipulate, right, more valuable.
Safety. It's something that you can touch and hold, and your family can be there, feel safe. It's like a big warm hug around your family. I get that. But if you're just looking for sheer numbers and sheer return, it's not even close.
I disagree.
A lot of 50% of the people, 2/3 of Americans buy houses, 1/3 rent. Only 50% invest in the stock market, 50% don't. What's the difference here? I would argue that it's just way harder to understand the stock market. It's bulls, it's bears, it's bells, it's red, it's green, it's up, it's down. It's which way is it? It's like the S&Ps, the Dows, the Nasdaq. People just don't understand.
Yeah.
But people understand real estate.
Yes.
But money talks, bullshit walks. It's clear.
Sure.
The stock market is better than real estate.
I disagree.
Tom.
Yeah,
I disagree.
You have to look at it this way. Okay. So when people saying, wow, all this conversation the last 15 minutes, what do I do with this? Here's what you do. You look at your income and you say to yourself, I'm going to be paying for a house some way. So which do I do it? Do I rent something here, or here? And what is that rent? What is that price? And then you have to take a look at the price of renting. And I always tell people, If you buy a house, look at your price of renting like this. Your property tax divided by 12, because you got to pay property tax at the end of the year. So it's $6,000, let's say. That's $500 a month rent you're paying to the city, to the county, to have a house there. And the interest rate that you're paying, the rent on the money. And so go look at that. And I like to equivocate what is just the base rent, and think about it. You're renting money and you're renting dirt. The rented dirt is your property tax. Renting money is your interest on your mortgage. And so I think you look at that, and now is a time for conservative living and to be careful about overextending yourself, especially in a time of inflation.
But I want to show this, Tom. I want to show this.
Gotcha.
When I bought, Rob, can you pull this up? This is the part why dollar cost averaging wins long term to people who are not expert investors. Everybody wants to time stuff, right? Well, if I would have only timed it well, look at this year, 2020.
So now what Patrick was talking about here, and which makes total sense. Now he's talking about the sophisticated investor. He's right. What he's actually saying is if you lack the wherewithal to be able to do either real estate or stock at a high level, be more conservative. He's going to walk through some numbers here in a second of what it is. And then I'll give you my commentary on the real estate economy on this as well also. But that's what he's saying. Let's keep going.
23, Magnificent 7 rate of return. Okay, going, Rob, zoom in a little bit. Okay, so this is just 2023. Okay, Apple last year did 48%.
Yes.
Microsoft up 57.
Okay.
Alphabet 59, Amazon 81, Tesla 102, Meta 194.
Okay.
Look at NVIDIA.
Wow.
239% last year.
Crazy.
They showed a number the other day that if you would have put $10,000 in NVIDIA, I don't know what the number was 7 years ago, 8 years ago, compared to the other stocks, it was number one. You're $10,000 now. We're $3.1 million.
Let's go back real fast. I want to see these numbers again. Let's make it a little bigger for everybody in the back row. I want y'all to see these numbers. Those are crazy numbers, and I agree with these numbers. Again, I'm not saying anything bad about these numbers at all. They're telling the truth. But again, this type of percentage is great on paper, just like if there's equity in real estate. This is just equity on paper in stocks. That's it. If you were to liquidate stocks, you're paying taxes. If you were to if you were to liquidate your real estate, you're paying taxes unless you utilize debt in both scenarios. Let's keep going, guys.
Number was 7 years ago, 8 years ago, compared to the other stocks. It was number one. You're $10,000 now. We're $3.1 million. Insane. Now, obviously, you hear those stories, you feel like shit. You're like, man, I should have done that. Who the hell knew NVIDIA is going to do what it's going to do? But the point is, what you can predict is the following. The reason why the stock market, to me, and I know some people are not for it, is America. I invest in capitalism and innovation. Mm-hmm. I invest in capitalism and innovation, knowing that innovators are always going to find a way to improve something. It's the last week to compete for the Manette contest.
So guys, that's it for him on that as well, guys. That is what Patrick actually said was spot on. I'm not saying that he's wrong at all. He's actually right. Where I kind of disagree when it comes to the better investment strategy. Again, am I biased, guys, because I'm in real estate? Sure. I'm a little biased, but I think you can make money in both stocks and real estate if you understand the industries themselves. Is stock market a little bit more complex? Sure. I think it's meant to be more complex, so you can have to lean up on a broker. Real estate is a complex too. It is, depending on what you're trying to buy, whether it be single-family residence, new construction, apartment complexes, commercial buildings. There's a different discipline there, but at the exact same time, what's the better investment strategy? For me, I don't like investing in something that can be manipulated, right? Because both are good investment strategies, modules, if you know what you're doing. What I kind of see when it comes to the stock market is based on a lot of hype, and that's fine. No problem with it at all. Take advantage of the hype. But it can be manipulated extremely easily by the government, by some insider, somebody within the company. It can be a variety of ways it can be manipulated. And it's a lot easier to do that because it's not tangible, right? It's not tangible. I like tangibility. I like to be able to feel, look, and say that's my investment, which is fine, and it can't be duplicated or manipulated by someone else. Now, can real estate be manipulated in some form or fashion? It really can, but it's based on a bad appraiser, a bad title company, or a bad realtor. But the market itself can't manipulate a certain property. Now, there can be decisions made from a macro level that can affect the micro level, sure. But at the exact same time, I'm a person, I like for my stuff, my money to be backed by something tangible every single time. I agree with you, Stephen. I see you on Instagram. It really depends on the person. For me, I lean more heavily on the real estate versus the stock market. Now, can you get rich quick in the stock market? Yes, you can. Yes, if you know what you're doing and you can catch the wave or a said stock or of a company and it increase real quickly, you can make money, I ain't gonna lie to you, a lot faster in the stock market. You can, but you can also lose money faster in the stock market because of that reality of you actually making money. So you can lose just as fast as you have gained. Real simple. So just be wise. You can't go wrong with either investment strategy. Just make sure you're under somebody that knows what they're talking about, guys. It's not hard, guys. There's a lot of debate around it. This is if you're investing in real estate or you're investing in stock market, you know what you're doing. This is what you're going to be saying to yourself.
My man. My man. My man. My man. My man. Good for you. My man.
Every single time, if you know what you're doing, you're going to be saying that, and you'll be saying this as well also.
Right. Yeah.
Don't be the person that thinks they know everything, guys, and don't get on the right mentorship. Because this is what you'd be saying if you don't know what you're doing and you're going into an industry that you have no clue what you're doing. You're gonna be saying this here the whole time.
Dog. Come on, man.
It's real simple. Make sure you're under someone that can actually walk you through this process, because you can't go wrong with either one of them guys. But man, here in a second, I'll give you my real estate kind of move real fast and what I would do in real estate and stock market. I'm gonna walk you through how you can utilize the strategy for both situations. All right. Most individuals that I talk to today, they're really concerned about the economy, specifically the volatility of it. Now, the area of their concerns really centers around the variable of inflation. Inflation right now is really outpacing people's wages, number one. And number two, it's beginning to affect their 401k and IRAs because their retirement accounts are connected or intertwined with the stock market. Over the years, I've been fairly successful in real estate investing. Currently, I own about $35 million worth of real estate under management. And also my partner and I have been able to build our private equity and venture capital firm to about $1.2 billion worth of assets under management. Now, this success has taken place in up or down economies. Now, whenever there's volatility in the market, opportunities begin to show up. There are 3 investment strategies that, if implemented the correct way, any investor can go from 0 to 6 figures in the next 6 to 12 months. Click on the link below or swipe up and let's talk through these strategies. All right, guys, we're back here. Now, here's my real estate kind of move when it comes to answering the question, real estate versus stock, the stock market, what's a smarter investment strategy? Well, I don't like paying high taxes. And Stephen, I see you on Instagram. I answer your question in a second. I don't like paying taxes. I try to find out every way that I can to not pay taxes, right? So whether you are growing your wealth in the stock market or in real estate, what I would do is I would utilize debt at the proper leverage, right? Because debt cannot be taxed. I call this the kind of move tax saving strategy, guys. Give me an example. I'm gonna give you a stock market example real quickly first. right? Let's say, for instance, you have the NVIDIA stock, right? And it increases up 100%. And let's say your wealth goes from 100,000 to $300,000, just making up some numbers, right? So you have $200,000 of equity there in that stock, right? Now, if you sell that stock, you got to pay a capital gains tax, right? And maybe even some fees, some broker fees. It's out of the exact same thing if you actually did that in real estate too, right? So with the equity there, how can you gain access to that equity, right? And not pay taxes? Well, you can properly leverage that debt, right? You can borrow against the value of your stock to acquire more stock. You're utilizing debt that way. Now, again, don't take my word for the stock for that type of move. Consult your financial professional. I'm not an attorney or a financial advisor at all. This is what I would do. In real estate, I do the exact same thing. If I acquire property for $100,000, put some dollars into it, I'm all in at 150, and it appraises up to $300,000, right? What I would do is I would utilize the debt in a refinance, right, to be able to pull that cash out so that I am not having to pay any type of capital gains tax because Uncle Sam is going to want half his portion. I don't think it's wise for me to give Uncle Sam half or damn near half of my proceeds, and he didn't do none of the work at all. So if I bought it for 100,000 and I put 50 into it, I'm all in at 150, and the valuation of it now is $300,000 because I improved the value of the property. $300,000 times 75%, guys, that is $225,000. So 225 minus 150, you made $75,000, right? The $75,000 is tax free because you used new debt to pay off the old debt. And you cannot tax debt because that is an expense. So in either scenario, I would utilize the aspect of debt. Right? I would do that. Because then I minimize my tax liability and I keep that good performing asset on my balance sheet. So I can then utilize that experience to go out and buy either more stock or go out and buy more real estate. It's extremely simple, guys. It's not hard at all, period, at all. So it's just, man, that's what I would kind of do. To be honest with you, man, it's not really hard. I can say that both industries are great industries. Just make sure you have the right wise counsel around you that can actually advise you on what to do, guys. That is it, guys. But man, I hope that actually kind of answers the question. We had a question on Instagram from Steven, my good friend of mine. He said that, hey, LaDale, and I'm gonna read it, guys. It says, what about taking a company public and selling shares? Well, if you take a company public and by selling the shares, you're paying taxes on that, and you're forced to have to roll the capital into a new environment, which it could be another stock, or to a new environment in some other form or fashion. Again, consult with your tax professional as well as your broker and in the stocks to make sure that this actually works well. But that's what you can do if you are looking to sell, if you're taking the company public. That's what they call a preferred stock, an IPO. A lot of the wealth is made there. The lion's share is made there. That's how Mark Zuckerberg got rich. That's how Warren Buffett got rich. He got rich doing a lot of these techniques. Taking them public, right? Being flush with cash, and then buying new companies there. The same thing. Elon Musk does the exact same thing, guys. So the wealth utilize debt to their advantage to minimize their tax liability, take home some cash tax-free, but also utilize that new capital to build their company by either acquiring new companies or reinvesting back into the existing company. It's real simple, guys. Well, guys, man, thank you so much for your time. Give me your thoughts, guys. Does it make any sense at all? Let me know what's going down, guys. Again, 100 investments, guys. 100 appraisals. Cliff is a licensed appraiser. He was normally here, but he's out of town. If you need him some assistance when it comes to appraisals, go to Cliff. Whether you're in Texas or nationwide, he can help you out. Go to hunterappraisal.com. Again, hunterappraisal.com, guys. All right. Number 2, guys, we have been asked concerning the real estate masterclass when we're going to be doing it again, guys. Well, what I thought was wise for us to do is to actually hold a month, really a virtual one. So we're putting together another real estate masterclass, guys, which would be pretty cool. We're looking to scale that out, to be honest with you, so that you guys can get to the cash flow club. Now you see September. Let me get rid of that real quickly, guys. The cash flow club, guys. This is another thing as well, guys. It's not going to be a webinar. It's going to be more so just a cash flow club. Some people are actually in the cash flow club now, guys. It's an online training for real estate, guys. Here is the QR code for you. If you are on platforms, you scan the QR code, click on the link below. This is on-demand real estate training for today's economy. We have a changing economy, so your training has to change as well, also, guys. Which is great. Click on the link below, or scan on this QR code, and you're there, guys. Also, guys, I've been asked also, hey, LaDale, what if I don't want to be in real estate, right? What else can I actually do to be able to make some money for my family? And I said, that's a great question, guys. I'm rocking with you. This is how we can do it here. You scan the QR code or click on the link below, guys. This is a video that a good friend of mine, Matt Zapala, did, talking about the 3 effective ways to reach $1.5 million in passive income. We're talking about 3 different business models, right? And it's for free. 3 different business models. Scan on the QR code or click on the link below in the description section. It's real simple, guys. And then lastly, guys, thank you so much, because I get asked a lot of things. American Rounds, guys, is the first AI-powered ammo vending machine, guys, that is exploding across the country, guys. It is off the chain, man. It's the first AI-powered vending machine in your local grocery store. It's fast. You can buy it. You can buy it at your fingertips. It's secure. We ain't sharing any information with the government. And number 3 is convenient. Get in and get out. You can buy your ammo while you're buying your grocery stores, guys. While you're buying your groceries. So, guys, here's a little bit of a promotion for them. Here they go.
American Rounds. We are in Pell City, Alabama at Fresh Value grocery store, installing the first ever automated retail machine for ammunition. The stores were really the inspiration for it. I mean, they knew their customer base, and they came to us and thought this would be a really good opportunity for their customer base. There's a lot of hunting community here in Pell City, and thought that their customers would love an opportunity to be able to buy ammunition here at the store.
We're super excited to offer, what we think is the first ammo kiosk. We're always looking for ways to give our customer another reason to come visit our stores. Anything that we can do to help them make their shopping trips easier. Based on the feedback that we've gotten just from customers today, they are so excited about us having the ammo kiosk.
We're getting ammo!
One of the ways we're changing the landscape of ammunition sales is to make it more available. Being able to move into a place like a grocery store, supermarket makes it a lot more available to the public. But we're taking a different approach to it. Traditionally, ammunition is sold at outdoor type stores, your sporting goods stores, and it just sits on a shelf. It's very accessible. Because of that, there's a high rate of theft. But with our machines, as you can see here, we have a very secure automated retail machine. We're able to age verify. We scan a driver's license. It then takes 360 facial recognition for the purchase and matches it to the ID. So the machines really provide an opportunity for safe, affordable, and available ammunition sales.
There is no doubt that foot traffic will increase based on the feedback that we've gotten. And again, we're super excited not only to have it here, but in other locations in Fresh Value as well.
We're really excited about where we're going. We are going to continue to expand here in Alabama. We have a machine slated to go into Oklahoma, Louisiana, Texas. So over the next year, we're looking forward to, seeing these roll out all throughout the South and the Southeast.
Guys, that's American Rounds. Again, American Rounds is the first AI-powered ammo vending machine at your local grocery store. Guys, QR code right here, or click on the link below, guys. They'll take you to the website, and you can see where we're currently at and where we're going, guys. So a machine may be coming to your town, and this is at your local grocery store, guys, which is pretty good. If you want to follow American Rounds, you can follow them at any platform on any platform at American Rounds. It's real simple, guys. Just put in at American Rounds, and you're there, guys. It's real simple. Well, guys, thank you so much for your time. I hope I actually added some value to it today, man. This was a very interesting discussion because I get asked a lot of the times concerning what is the best investment model or strategy, guys. And I always say which one is best for you. I think that the value tainment team did well, which was fine. But the exact same time, guys, it's real simple. I hope you guys actually had a good time. You know, I ended every single time, guys. Before you leave and while you can, you see that thing, guys. Take that damn picture and give it to your mama. Then, how did you party, guys? See you guys next week, guys. How did you guys? Peace.
Bless God, give thanks. Bless God, give thanks. Bless God.